Okay, welcome to this class on basic of options trading. The basic of options trading. Okay. Today I'm taking this class because most of the people, whoever is trading in options, I know most of you are love to trade in options because high risk reward. In options, you are having high risk reward. You can make 100, 200 points, 300 points profit with buying 50 rupees or 100 rupees option. So 2x, 3x possible, and we know that in our trading we did that. We did many times, and we will do that. So the thing is that we need to follow some basic thing. We need to follow some basic thing that will help us to make good profits. Okay. So that we must have that idea. That is what we are going to cover in today's class. Okay, so I will show you, just a minute. Currently, Bank Nifty is trading around 27,143, the closing. That is the cash market. Okay, that is spot price, spot. So I'm just for example, I'm giving you some examples. Okay, so just take it 27,100. Current market price of Bank Nifty is 27,100. Okay, so if the current market price is 27,100, then which call should I buy? The first question, which call should I buy? For that I must know there are three types of options are available. There are three types of options are available: in the money, out of the money, and at the money. In the money, out of the money, and at the money. Now, which option is the best? Most of you are trading with out of the money options. Most of you are trading with out of the money options because they are very cheap. They are easy tradable because they are very cheap, low cost trading, but risk is higher. That is why I'm going to cover today, and pay attention, because today the closing is 27,100. Then there will be so many strike price. In Bank Nifty there will be so many strike price, right? Like that will be 27,100, below that 27,000, below that 26,900, below that 26,800, like that. So there will be so many strike price like that. That is strike price. So that is my strike price. I will have so many strike price. Now your job is to identify which strike price is the best. Yes, most of you are correct. Vipin ji, Vicky ji, Satish ji, that is in the money. Now your question will be, why I'm saying in the money? Why not at the money? Why not out of the money? The reason is, just for example, I'm taking it just for example. If which one is the at the money? The at the money is this one, the green one, sorry, the yellow one. That is at the money. What is the, if it is call or put? So let's take it call. There is another one for put. So CE means call, PE means put. Call option and put option. Okay. So call option and put option, we have two type of options available. Now Which one is at the money? The yellow one. Look at that. Currently market is trading at 27,100. So 27,100 will be your at the money. Now which one is your out of the money? Out of the money means for put the lower one, the lower strike price. The lower strike price will be your out of the money. That is out of the money. I am making it red. For calls, the above the current market price, whatever strike price available above the current market price, they are out of the money. Got my point? So the red one is out of the money, that we should not trade. So be sure that if we are trading in put, then lower than current market price is out of the money. And if we are trading in calls, then above the current market price or above the current Bank Nifty price is out of the money. That we should not trade. Which one we should trade? In the money. Always in the money. Always in the money. The green one. For put and for calls. Completely opposite. For put, above the current market price. For calls, below the current market price. Always remember, for calls, below the current market price of Bank Nifty. For put, above the current market price of Bank Nifty. Now your question should be, why I am saying in the money? Why I am saying in the money options? The reason is, just for example, I am giving you one example, okay? If 27,200 put, price of that put is 150 rupees. If 27,200 put, price of the put is 150 rupees, that is called premium. So what is the premium for the 27,200 put? It is 150 rupees, okay? Now we should know what is the premium, the rule of premium. Premium is equal to IV plus TV. What is IV? Intrinsic value. And what is TV? That is time value. So premium is equal to intrinsic value plus time value. Now, which one is intrinsic value? Intrinsic value means how much profit you are already making, already in your pocket, how much profit you have. Now, in 27,200 put, how much profit you are making? You are betting on that, you are buying 27,200 put. It means you are betting that expiry will be below 27,200. So current market price, what is the current market price? 27,100. Now, how much profit you are already making? Already 100 points dropped. So that 100 points profit, whatever you are making, already profit you are having, that 100 points, that is called intrinsic value. You are already making that, you are already having in your pocket, that is your profit. Buying 27,200 put means you are betting that market expire below 27,200, whatever below, whatever amount will be there, whatever difference will be there, that will be your profit. So already 100 points difference is there. So that 100 points is your intrinsic value. Already you are in your pocket. So intrinsic value in that call, intrinsic value is 100 points. So what is the 100 points? Difference between your strike price and current market price, that is 27,200 minus 27,100. So that 100 points, that is intrinsic value. Okay. Now, time value. What is the time value? Whatever left, that 50 rupees, that is time value. Now, if you ask me how to calculate that time value, then I have to go through a very complex calculations. I'm not interested to go through that much complex calculations, but I just wanted to tell you that time value will be decayed every day, every hour, every minute. It will decay. But your 100 rupees, that intrinsic value will not decay. That will be fixed. Okay? That will be fixed. So that is why I always prefer to buy in the money options in Bank Nifty, and it will make sure that you are already having 100 points within 150 points. If market goes choppy, how much point you can lose? Only that will decay, and that will decay in a systematic manner. Not within a minute it will be zero. No, it will be zero only at the expiry day. So it will decay very slowly. So your loss will be very less, if market goes choppy. If market goes in opposite direction, we have stop loss. I always mention stop loss. TV means time value. Bharatji, it is time value. So I always use stop loss, so that stop loss will be triggered. And always remember that there is nothing 100% accuracy. 100% accuracy is not possible, but 80% to 90% accuracy is possible. 70 to 80% accuracy or 90% accuracy, that much possible, but 100% is not possible. So some of my trades will go wrong. Some of my trades will hit stop loss. Always remember that. So what I will do, I will buy in the money calls. Now, another positive side. Another positive side is, if stop loss triggered, then I will exit. If it goes as per my direction, if it goes up, then if it goes up, like currently market is 27,100, now market goes to 27,300. Market moved 300 up. So how much profit you will make? You must know how much profit you will make. So the twist is that your intrinsic value will be, we are buying put. So if we goes down by 200 points, means 26,900. If 26,900, then your intrinsic value will be 300, pure 300. That money cannot be changed. It will be fixed. Your intrinsic value always be fixed. Per 1 rupee increase, intrinsic value will increase by 1 rupee. So you are very much sure for 200 points up move, I will make 200 points intrinsic value. That is fixed. For 300 points you will make 300. For 500 points you will make 500. But your time value will decay. That will be decayed to maybe 10 rupees. So 40 rupees loss. So that price will be 310. And you have bought that at 150. So how much profit you are making? Your profit is 160 points. So for 200 points movement, you are making 160 points profit. That is very good. Very good. Almost 80% movement. And 80% return. For 200 points movement, you are getting 160 points return. and you have bought at 150, now it is 310, so it is a multi-bagger, isn't it? So this is the reason why I say always buy in the money calls, in the money puts, always. So I hope it is clear, guys. Any queries? You can update in the chat box. If you have any queries, you can update in the chat box. Thereafter, I will move to the next part. Okay, thank you, Dinesh ji. Thank you, Anubhav ji. Thank you. Now I will go to the next part of today's session. Would the loss also be proportionate? See, Kunal ji, the loss is fixed. Like if I bought at 150 rupees, I have placed my stop loss at 100 rupees, so the 50 rupees is my loss maximum. My loss is maximum up to that only. 50 rupees or 100 rupees, whatever stop loss you are making, that will be your loss. That is fixed. But how much profit you will make, that is not fixed. That is, so for 50 rupees risk, you can make 100, 150, 200 points profit. Like last time we make 200, more than 200 points profit in Tuesday. Can you remember? 133 to 343, 210 points in a single day. How we made that? Because of that option. That is, option can give you that much profit. So your risk reward is more than 1:2. So your risk reward is very good. Okay. Example of out of the money. Example of out of the money. Let's take example of 27,300 call. In that time I used put. So now I am using call. Okay. Example of out of the money. So out of the money, whatever 27,100 is the current market price. So if I buy out of the money call, then above the current market price of that Bank Nifty, whether 27,200 or 300, whatever is that is above the current market price. So intrinsic value will be 0. For OTM, intrinsic value always 0, always 0. For OTM, out of the money or at the money, even for the at the money options, always intrinsic value is 0. So you have nothing in your pocket. So what will be the premium? Only the time value. So the cost will be, it will have 100% time value. That is why when you buy out of the money calls, out of the money puts, as you don't have intrinsic value, it will decay very fast, very fast. That is why I asked to buy always in the money call, in the money put. Okay, Maroju ji said, can you also show strategy where we determine Bank Nifty will go up or down? Because unless we know the Bank Nifty is up or down, we cannot enter options. So Vidyasagar ji, for that reason, if you want to know how to buy and how to sell, then you have to join training program. I cannot tell you within a single line. So it is a subject. We have to learn it. We have to understand the reason why it is moving up, why it is moving down. So it will take at least 10 to 11 classes. Okay. So if you want to join in OTP program, you can join OTP program. I will start my OTP program in next month also, where we can understand. You can join the training program. Today it is only the basic understanding. I cannot give you these techniques so easily, because you have to understand the logic behind the buy, sell, or stay inside line, when I need to stay inside line. That is also another biggest reason of making losses. People don't understand when they should stay in the sideline, when they should not trade. That is also another big reason why people lose money. Okay, let it go. Whatever we have learning today, it is about the options. So we have learned that in the money options will have intrinsic value, so that price will not decay very fast. Out of the money options will have zero intrinsic value, so time value will decay very fast. Okay. Now the thing is, second one, my second point of discussion, that is quantity calculation. For options, I have heard that last हो गया, इस बार तो हमने एक लॉट लिया, प्रॉफिट हुआ तो फिर भी कुछ आया नहीं, kind of that. So the thing is, guys, let me tell you and be sure about that, if you don't follow the same or equal lot size, if you don't follow equal lot size in each and every trade, you are not going to make profit then. So for making profits, you have to trade with the equal number of lot size in each and every trade. If you can afford 2 lots, I am giving you example, 2 example. Okay, you are trading in Bank Nifty options in 5, there are 5 trades in 2 lots. So Mr. A is trading in 5 options, 5 trades in options with 2 lots each, and Mr. B trading in first trade with 2 lots, second trade with 1 lot, third trade he is feeling very much bullish, traded with 5 lots, fourth trade again 1 lot, fifth trade 4 lots, third and that is the fifth one. Okay, so he is not following any rule, but Mr. A is following the rule. So in first trade he is making profit of 40 points, second trade making loss of 50 points, third trade making profit of 120 points, fourth trade making profit of 20 points, fifth trade he is making loss of 60 points. Okay, so that is a loss. That is a loss. So in this case, pay attention, guys. That is one of the most biggest reason why you make losses. In this case, out of 5 trades, Mr. A, he has made 3 profit making trades and 2 loss making trades. Okay, so how much profit he is making? $40, 50 rupees loss, 120 rupees profit, 20 rupees profit, 60 rupees loss. So 70 points. At the same time, Mr. B also doing the same thing. He is also making the same thing. No difference. Now, how much profit here he is making?
ईमेल आईडी मांगे सर शेअर करते कोणाला शेअर करने की त्यांचं जीमेल आईडी पाहिजे ते ऍड कराल
80 rupees and so on.
कोणाला
Okay. So how much profit at the end of the day? That is a loss, and that is a loss. Okay, these two are losses. Here he is making that much profit or loss. So that is the loss, that is the loss. So here the thing is that the difference is in every trade, whenever you are making 70 points profit. So how much profit here you are making? Sorry, it is just a minute, guys. Okay,
Gmail and Gmail kappa email.
so that is your profit at the end of the day. But here that person, Mr. B, he is making profit of $410 points, and Mr. C, who has taken 1 lot, 2 lot, 1 lot, 1 lot, and 5 lots, like that. That person will make profit of loss of 220 points. So there are 3 examples. So in this case, guys, are we facing voice issue, voice disturbance issue? Anyone facing voice disturbance issue? Okay, thank you. So I have given 3 examples: Mr. A, Mr. B, Mr. C. So Mr. A is following the rule. Every time he is following the same quantity. Every time he is trading with 2 lots. But Mr. B is not following that rule. Mr. C is not following that rule. So with the same calls, just imagine I am providing calls to these 3 persons. Mr. A is following my trades with proper risk reward ratio, with proper quantity size. But Mr. C and Mr. B, they are not following. So Mr. B is making huge profit. Mr. C is making huge loss. Why? Only the reason is, look at here. Mr. C traded 5 lots on that trade and we made loss, 60 points, very small loss. But as he made huge quantity, 5 times of his normal trading quantity, so he lost money at the end of the day. And Mr. B, who has not followed that rule, now he is making big profit because for his luck, only for his luck, because on that day when we made 120 points profit, that day he traded huge quantity. If on that day he have traded again big quantity, then he will lose the thing is that if you don't follow the proper quantity size, then you are not going to get continuous profit. कभी आपका बहुत प्रॉफिट होगा, कभी आपका बहुत लॉस हो जाएगा. You can lose money even if I'm making profit. You can lose money even if I'm providing profit making calls. You can lose money even if I provide net profit at the end of the week. Then also you can lose money, because on that day when we lost that trade, that time you have traded huge quantity. So the thing is that every time, whenever we are trading, we have to trade without that equal lot size. We cannot make continuous profit. Sometimes you will make never favor you for long time. So what is the rule? The rule is trade with equal lot size every time. Every time trade with equal lot size. Gurmeet ji, do not unmute. Thank you. I have muted yourself. Yeah, that voice problem due to that person. Okay. Please do not unmute. If you unmute, then it will have some voice problem. Please do not unmute, Subham ji. Thank you. So guys, is it clear whatever I have discussed? Is it clear, guys? Why I am saying equal lot size every time? See guys, be sure about that. We have no control over our trades. We have no control, and we don't know which trade will give you profit, which trade will give you loss. You have to follow the rules. If you don't follow the rules, if you don't follow the basic principles, then we will make net loss. One day you will make good profit, but continuously you will make losses. Ultimately you will your profit. Sanket ji, please do not unmute. Okay. Armugam ji, I have not said that 100% accuracy will be there. I said there will be loss making trades. How to overcome it? Only through the proper position size. Just look at that Mr. A. Out of 5 calls, 2 calls are loss. In 2 calls, he has made loss. So what? At the end of the day, he is making profit. At the end of the week, after 5 days, he is making profit. Yes, my stop loss also big, my targets also big. Thank you, Mukherjee. Thank you everyone for joining. Guys, I'm closing the recording here.